Let's continue our examination of this more complicated cash flow statement. We left off in the end of July where we had $4,000, and therefore we carried this $4,000 over to August. In the month of August, there were $7,000 worth of cash inflows and $10,000 worth of cash outflows. So the way we calculate it is to put a plus or minus in front of these numbers to calculate the final closing balance for that month. So we start with 4,000. So it's a plus 4, cash in is plus 7, cash out is minus 10, and plus 4 plus 7 minus 10 equals 1, because 4 plus 7 equals 11, minus 10 equals 1. And that's why the closing balance is 1. Cash in will always be a plus. Cash out will always be a minus. Sometimes if the balance is negative and the closing balance, as we can see in September, it will be denoted with the brackets around the number. So we can see that here we start with $1,000. So plus 1 plus 5 equals 6. 6 minus 10 for cash out equals minus 4. So closing balance is minus $4,000. That minus $4,000 is carried into October, which is then has cash in. So minus 4 plus 6 minus 9 again is minus 7. So you can see in the month of September and October, quite a bit of loss was made. But that was made up in November, where we have minus 7 plus 21 minus 9 equals $5,000. And that's a little bit of a stronger position for the business to be in. You may consider that the best month to pay annual bills like insurance would be when the business has a higher cash flow. So months like January, February, and March, when it has a strong cash flow and can pay its bills, it should pay. When it has a low cash flow, it may actually struggle to pay different bills. In the construction of your own cash flow statement, it is really important to put things in the correct column, and this one has been started for you. For example, for Juanita's Craft Shop, we've already put here the label. So Juanita's Craft Shop income statement. Cash flow statement. That's incorrect. Let's make that correct. Cash flow statement for July 2021. And we're calculating what goes where. So the sale of craft goods was $8,200. So that's an inflow. So it's just why we put that under here as sale of craft goods. So we put the description of what has happened here and the number 8,200. Now we don't calculate until the end, but we've already calculated here what goes where. So wage is an outflow. So I'll put 1,300 right on the end here. So it looks like this. $1,300, and it's really important to get all the numbers under each other in the different columns. So 1,300 will go there. As you can see, I'm not putting dollar sign because the dollar sign is already given at the top here. I would add that here as well. Craft equipment, rent, insurance, and electricity, because they all represent a cost and therefore an outflow to the business. To calculate the closing business, I would simply calculate the total cash inflows minus the total cash outflows to have the closing cash balance here. And that's it, cash flow statements.